Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay. What's the second best? There is no second best. There's no second best crypto asset.
Hello, friends, and welcome to the Why Bitcoin Show. I'm your host, Dale Warburton. It's a weekly podcast on why Bitcoin matters and what makes it completely different to all other cryptocurrencies. If you're interested in Bitcoin and you'd like to distill crypto fact from fiction, you've come to the right place. We are live, or shall I say, I am live, because today I'm very proud to introduce no one. It's just me. This is a solo episode. It's the first of its kind, and I'll explain to you why. It's because I went to Bitcoin Alive this weekend, and I really believed that I would have a couple opportunities to discuss stuff at length with people in a quiet place. And I could get some great interviews. I also stupidly thought that I could walk around and do little quick takes, quick little interviews and snippets with that background buzz, just to create a bit of FOMO, to give people a sense of what it was about. Well, here's what I found. As an MC, remarkably, you don't have time to do interviews. What an idiot am I? So I was an MC for the stage upstairs at the Nakamoto stage. So unfortunately, I didn't get a chance to look at any of the content, but I'm certainly going to be catching up with it all on YouTube when that gets released. But yeah, I didn't get a chance to talk to anyone in sort of an interview type style because naturally time is limited. And then I thought, you know what, don't worry. We'll just do some short interviews. Maybe that will suffice. Well, would you believe it? But people sort of 7 beers in don't necessarily produce the best interviews. Oh dear. I had an epic chat with my boy Brendo, but yeah, it was a little rough around the edges, and I thought, you know what, this is probably not what you need to hear. I did 1 or 2 interviews and I was like, nah, I'm just gonna have to ditch those. Love you guys, but unfortunately, I thought I could perhaps add some more value by just sharing some thoughts about Bitcoin Alive, the premier Bitcoin only conference we had here this past weekend in Sydney. I'll talk a little bit about that. Wanted to give you some thoughts on, I guess, a couple of key takeaways and some themes and just random ideas that sort of came from that conference, having had all of 24 hours to reflect. And then I also wanted to share some stuff in relation to real estate, because some of you know I've been working in real estate for like a decade. I often talk about, I often mention the fact that I'm a lawyer because it explains a lot about the way I think in a structured way. It's just the way you get trained to approach problems and think through issues. And even though law is it's like literally like watching paint dry in terms of a profession. No offense to anyone in the industry. It pays well, but it is like absolute hell, like, drafting contracts and stuff. I always wanted to be at the forefront of things. So I thought, oh, deal making and property is cool. And so I did a master's actually in property, and that took about 3.5 years because I did it part-time, and it's nails. It's absolute nails to do anything part-time. So don't ever try that, to be honest. But it did teach me about portfolio theory, about asset allocation. And so that really got me going down the rabbit hole of value investing. And so I'll always be grateful for those sort of lessons. And that's what led me to Bitcoin ultimately in 2020. So I do want to talk a little bit about real estate and just offer some thoughts. And this episode might serve as something you wish to share with friends or family who are what I would call real estate maxis, people who they love real estate, it's their favorite asset class. And hey, it's been hell of a success with them. So, why not? Well, I want to try and provide like my thoughts around what is like an objective analysis of it, as objective as I possibly can be. I mean, none of us are objective, let's be clear, but I've done my best. And so I'll just try and give some thoughts that I have around the asset class. So, all right, let's just talk first about Bitcoin Alive. All right, so as I said earlier, Bitcoin Alive is the premier Bitcoin only conference we have here in Australia. You can think of it as, the equivalent to Bitcoin in Miami or Nashville, the Bitcoin conference, right? It was absolutely exceptionally organized by Chris, Dylan, Jess, and Kath. Well done to you guys. The attention to detail was exceptional. Everything was right on tongue in terms of timing. Like, well done. Timing is hard to get right, and get everyone like speakers on, bring this person on, and everything was done. It was just so professional, man. I was so impressed. So kudos to you guys for putting on an epic show. I think everyone got great value for money. There were some fantastic international guests, the likes of Eric Kaysen, who I had the chance to chat to you a little bit later with, and man, that guy's a deep thinker, and really got an opportunity to learn a lot from him. And I didn't get a chance to listen to all the sessions, obviously, because I was an MC at one of the stages, as I mentioned, but I'm certainly looking forward to catching up with them. So, if you've never been to Australia, like if you're one of my listeners overseas, let me just say this. Yes, Australia's far, okay? Yep. But it's got incredible beaches, incredible weather, incredible people. I'll take you on snaky adventures. For those of you know me, I like snakes. I'll show you all the wildlife spots, the koalas, the platypuses, the kangaroos, the snakes. Other people will take you to the beaches and whatnot if you like surfing or whatnot. And then there's like a mad Bitcoin culture, like really in every city you can go and meet people. And Bitcoiners, in my experience, are just some of the most generous people, and they will welcome you with open arms. So do yourself a favor and get over to Australia and just find an excuse to come. I suppose the thing about Bitcoin Alive that makes it different to the other sort of conferences that we've had is that it is much more, dare I say, normie friendly. It is a better way for us to attract and talk to people outside of our circle. Sometimes what we do can feel like a bit of a circle jerk, and I don't mean that in like a ridiculous way, but it's all like we're just congratulating each other for, you know, escaping the matrix, seeing various things for what they really are, understanding the nature of money, and hey, we're so right, and look at my bags. I mean, nobody's talking about their bags, just to be clear, but you understand what I'm saying. It's like you don't want to be sitting in this little echo chamber. So you want to introduce new people to the fray, and Bitcoin Live's like the perfect place for that because they got content that suits everyone. So I love that bit. I love bush bashes. I love bush bashes when I attend them. But the reality is that for the average person who's just living in normie land, who looks at Bitcoin as an investment, you're not going to get them across the line at those types of events for the most part. They need to be at least a bit curious or have some sort of existing beliefs that are saying, I'm challenging these things. I'm actually open to this. Whereas just a complete normie can rock up at Bitcoin Alive, and there is something for everyone to learn. And so from that perspective, I found it really valuable, and it was well pitched in that sense. Unfortunately, Australia is cursed with numerous crypto conferences, and they're actually like remarkably well attended, and it can be quite disheartening. You look at it and you go like, which serious person is actually going like, hey, Doge or Pepe or Solana is the future? Like, no, not a serious person who's actually done any real work. Maybe somebody who likes gambling. But yeah, you know what I mean? And so when I think about Bitcoin Alive, it has a fantastic role in this country as a Bitcoin only conference. And so I can't recommend it highly enough. I thoroughly enjoyed it. I did not hear a single talk, so I can't tell you if the talks are great, but I saw the lineup and I know the vast majority of people, and they're good. They're very good, and I can't wait to watch them. But based on the conversations I had, there was just overwhelmingly positive feedback. One of the key things, and this was like one of the main takeaways I wanted to share with you, was I've said this before, and it's not unique. Like almost nothing I say is unique. Let's just be clear. Like I'm not a bloody genius when it comes to this stuff, and perhaps that's why I have so much empathy for the normie, because I still do have like one foot in normie world. I see it. So, and the idea here is that if you're in TradFi, if you're somebody who doesn't want to think about like, oh, what do I do with my investments? I'm just going to trust my investment advisor or my super fund, or just pick any person who's like a fiduciary who's responsible for managing money, whether it's your asset manager, financial advisor, financial planner, it doesn't matter. Like they're all the same, right? You're trusting them and their judgment and their discretion, and you're saying like, look, I don't have much time to work all these bloody things out. I can't tell you which company is better than this company and whether the bond yields are going to go up or down and what the right allocation is. Like, that's your job. And oh, by the way, I'll pay you. And so I have tremendous sympathy for people who are just trying to get by, just to do their job, and they should be able to save in the currency they sort of earn. But it's not enough. They have to speculate, but they can't really undo it all on their own. So they have to trust someone. And and so then what we discuss at length, not only at the conference, but then at the after party, over a 12-year-old McCallum. So thanks, Hats. I believe you or a man with a large beard, Barded. Don't want to dox him. He gets a bit snotty around those things. But yeah, like I think the biggest thing is that, I've said this before, Bitcoin is not an IQ test, it's an EQ test. It's an ability to be intellectually humble. And if you are somebody who is in the traditional financial world, or if you're somebody who is reliant on the traditional financial world, the first step to getting Bitcoin, to understanding it, literally, is just to admit that there's a small chance you might be wrong. You may be wrong. Your worldview might be wrong. You know, I would have thought that during the whole worldwide flu pandemic, we would have seen people kind of go, aha, not everything is as it seems. Like you don't have to have, you know, um, a tinfoil hat for that sort of thinking to exist. It's like you told us this thing would do X and it didn't, and you said that it would, this would end when it does when Y happened, but it didn't. And so, oh, and it originated from like a market. Okay, like, no, it's more like a lab. And then it's like, yeah, that's more like the reality. It's like everything was bullshit. Obviously, like we know that now. Like the average person doesn't know that though. And like I've had conversations with mates, and they're like, "Ooh, they trust it all." And I'm like, "Are you mental?" So I thought that would be the thing, but it's not the thing. The average person is just not prepared to challenge their existing belief set. And if you don't want to challenge an existing belief set around money, then you will never buy Bitcoin in any meaningful quantity. You'll own it, but you will not know you own it because either your super or your discretionary investments are going to have some slice of it in Bitcoin eventually, and you're going to get the price you deserve. And I'm going to go, yeah, I'm sorry, bro. I did tell you, and I don't have sympathy for you because you dismissed me when I try to talk to you about things, and you weren't intellectually humble enough to go, maybe my conception of the world is not right. Maybe this idiot standing in front of me, Dale, is maybe there's a 1% chance that he's right. And as my mate Hats was actually describing, it's like, how confident are you in your sort of view of the world? Oh man, as I keep moving, my whole table's moving. Okay, let's get this steady Eddie, can we? Steady up, boy. Okay, I'll just stop moving. How confident are you that your sort of conception of the world is as it is true? If you're like 99, then maybe you should take a 1% allocation that you're wrong. If it's like 10%, maybe you need a 10% allocation. But it's just something that we spoke about over and over and over again because I looked around and there were just a lot of Bitcoiners at Bitcoin Alive. There were quite a lot of people that was new. It was just like their first Bitcoin experience. And it was awesome to meet those kind of people and have a chat to them. One dude in particular, Mark, and I had a massive laugh about some stuff at the end at the after party. But the reality is there's not a lot of them, right? And I said, why? It's over 100K right now. why are we seeing mostly Bitcoiners here? Why are they not just like, why like there's not a lot of media like from mainstream media? Why are we not seeing a lot of normies? Like 100K is like a psychological level. If this happened in the States, I'm pretty sure there'd be a shitload of people rushing through. And I think it's just that inability to question things, the inability to think for yourself. And that's what brings Bitcoiners together. And it's the one thing that I notice about this conference is like, we're all different. We all like different things. We think differently, and that's great. And we all have different interests. Like, I'm never going to be a technical person. However, what is awesome about Bitcoin is that there's almost this uniform ability to think critically. I don't know any Bitcoiners who are just captured by dogma. And so that's one of the key takeaways. If you want to come to Bitcoin Alive and meet some intellectually curious, smart, engaging people, they might be different. They might be weird. And some of us are weird. I'm weird, but it's awesome to talk to people who think differently. And I think for so many people, it was an opportunity just to connect with like-minded people, and they drank it up. Like literally the fire hose of unique people just open up mouth and pour it in. And that's how myself and a lot of people found it. So I got home and I'm like buzzing. I don't know what it feels like to be on like you know, um, a cocaine binge as an example, but I would say honestly, I was like, came back and I just wouldn't stop talking to my wife, and then eventually I was like, I need to come down from this. So I'm just coming down like 24 hours later. Anyway, but it's not as bad like chewing gums and all that jazz. But I've been so pumped. It's been so awesome, just the energy and all that sort of thing. So to put a nail in it, hey man, get yourself over to Bitcoin Alive 2025, especially if you're international. We will show you an exceptional time. I promise. Do it. Okay, so that is Bitcoin Alive in a nutshell. And the key takeaway that I thought was A, it's epic to get unique, independent thinking people together because here's what, and then B, what separates us all and our ability to understand Bitcoin is our intellectual curiosity. And if you don't have that, you're never going to get Bitcoin. And sure, you might have a smaller allocation, but it's not going to change your life, son. If you want to go big in Bitcoin, you need conviction. If you want conviction, you got to do the work. If you want to do the work, you've got to be intellectually curious. Otherwise, you're going to just look at it like any other tech stock. Like, hey man, why am I going to spend like $100 in Apple? And that's why we Bitcoin. We're different. We are a different breed. So well done to the organizers. Love your work. And thanks to everyone who came and said, hey, it's just so epic meeting people in real life. You're like, hey, I listened to your pod. I'm like, honestly, thank you so much. It's mind blowing. All right, next, real estate. A couple of things here. Firstly, I am not talking about real estate to live in. Everyone has a different perspective as to whether or not they should be renting or buying or rent vesting, as it were. Either way, my perspective is that's up to you. I do not regard your primary residence as an investment. I look at that as a lifestyle asset. If it grows in value, great. I know it's been a real source of wealth creation for folks in Australia, as an example, but as a sort of fundamental principle for this discussion, I'm talking about real estate from an investment perspective, not something that you live in. The second thing is that I don't think it matters if you're talking about residential property or commercial property, whether it's industrial, retail, or office. It doesn't matter. The principles remain the same. As far as I'm concerned, they share the same sort of characteristics, albeit with some slight nuances and differences. But first and foremost, property is property, and the fundamentals apply. And this is something that I picked up over the course of not only during my experience working across the strategic, operational, and transactional side of real estate, but also during the 3.5 year slog that was a master's. And so from that perspective, I feel like I got a good grip on the asset class. There was a time in my life where I had a vision of having a portfolio of properties that I grew using conservative leverage, and that eventually I would pay off that debt and then have a beautiful stream of income into my retirement. That was sort of the goal. That goal started disappearing over time as I started realizing all the downsides in real estate, and it really we put a nail in that coffin in 2020 when I learned about Bitcoin, because what I aim to do here is really just as objectively as possible. And I say as possible because you know that I'm a Bitcoiner, so I would never deploy capital into real estate investment if I've got Bitcoin as an option. But I say that I will be as objective as humanly possible, knowing that I've got my own biases and prejudices and all that jazz. And so I'll do my very best to be as charitable as I can, because I do recognize the benefits of investment properties for some people with a certain type of risk appetite. And then what I'll do is I'll have a look at how Bitcoin compares, because this is, after all, Bitcoin show, and then kind of explain to you why I prefer Bitcoin. I mean, you might go, oh, how are you going to compare the two? It's like chalk and cheese. Well, Bitcoin, as Michael Saylor has repeatedly said, and perhaps just because of his own self-interest and not wanting to elicit any alarms from folks in power, he just calls a bit digital property. And I think that is a fair assessment. I mean, the tax authorities agree with that, so I'm happy to run with that. I mean, if it was a currency, I wouldn't be paying tax on it. So given the fact that we have to pay capital gains tax on our Bitcoin, I'm happy with calling it digital property. And I'm going to run with that for the purposes of this discussion. All right, so let's start out with, at a very high level, like real estate, and again, it doesn't matter what kind, has long occupied a place in many investors' portfolio as a low volatility asset capable of producing very steady, reliable capital and income returns over extended periods of time. It's not something that you want to get in and out of as an asset class. It's an asset class that if you invest in, you do so over longer periods of time. And if you do it correctly, it's as I say, a relatively low volatility way to grow your wealth. And what a lot of people love about real estate as a starting point is also the fact that it's tangible. I can see it. Some people, particularly the older generation, have less faith in things that are digital. They can't necessarily see a stock that you can say to them, look, you've got a claim against a company's future cash flows, but to many people, that doesn't really mean much. You can talk about a bond, and there was a day where you used to get like little pieces of paper with your stock certificate, and in all probability, you got some sort of equivalent with a bond. But these days it's all digital, and so for some people, it actually works that it's physical. So people like to see that, and real estate is a $280 trillion asset class globally, so it's massive, and it stores a lot of wealth, and it has traditionally been viewed as an inflation hedge because you can't print properties. We can talk about whether or not the properties are of a equally high caliber that they were years ago. In other words, the homes that are being built, and I just can relay this here in Australia, just these timber frame homes that you could almost like cough and blow down. I'm just exaggerating clearly, but compared to the solid brick of the past, they would cost about 10x what a timber frame home would cost, or whatever the case may be. It's just the quality aside, the idea here is that real estate has proven to be a good store of value and has been a good inflation hedge, generally speaking, because you can't just create more, but they're not making more land, as the saying goes. Part of what creates value for real estate, in some instances, not all, is their innate scarcity. I mean, I don't know if you've ever thought about the fact that every single property on the planet is unique. You can even have the exact same floor plan, the exact same layout, the exact same size, exact same block size, but it's going to be a different property, and it might have a slightly more, slightly less sun. That might be good, might be bad. Maybe you're just elevated a meter and suddenly now you're in a flood zone and your neighbor's not. You've got all these little tiny factors. So property is not fungible like Bitcoin. You can't just swap one property for another. And nowhere else is scarcity more evident when it comes to value and valuations is when you're talking about residential property in areas where there are these innate geographical constraints. Like if you go cruising along the beach side there in Sydney, and I don't even know what it's called. I really should know, but there are all these prestigious suburbs. You've got to say Bondi and Coogee, and as you just keep going down, you can't create more property out there. There's just ocean, right? The same as in Cape Town, where I'm from in South Africa. Cape Town is part of the reason why it's got such an expensive real estate market is not only because it's well managed as an economy relative to the rest of the country, but there are just innate geographic constraints. You've got a mountain on one side and an ocean on the other. It's like we don't have much more space, guys. And so obviously, all things equal, a house sitting on perched on a beautiful hill overlooking a world-class beach is so much more scarce than a apartment 708B in a giant multi-story building with thousands of tenants. Obviously, that just makes sense, right? So I guess those are one of the key reasons why property tends to have value. And then look, something that you really can't get away from is the fact that property does enable you to enjoy cash flow. Cash flow for some people is fundamentally important. And so they might wish to buy a property cash and then just enjoy the returns that it provides in the form of cash flow, income, and then they can enjoy some modest capital growth and they can live with that and they're happy with that. It makes sense for some highly risk averse investors, particularly those who value the physical over the digital. And it goes to show, I mean, ultimately, the fact that you can generate income through it by tenanting the property means that if all, if hell broke out and everything went to hell in a handbasket, so to speak, and your life was in tatters, you can go live in your investment property. Okay, it might not be in the area, it might not be ideal, but you can still do it. You can't go live in your shares or whatever the case may be. There's still some utility. So that is it is an excellent feature of real estate as an investment class. Now, sure, you can't go and live in your commercial property. You're not going to go live in a shopping center or an office strata unit or something like that, obviously, but it still does have utility in the fact that you can be physically occupied. Like maybe you can occupy it as a business. So you can't find a tenant. Well, you can go and spend your time doing work there at that office. And I mean, I already mentioned the example of being able to live there. So with Resi. So, there is that utility function. Probably, and this goes to I guess, one of the main attractions of real estate is the fact that you can actually use leverage to create wealth. And what you're effectively doing is shorting the fiat currency. And I'll give you an example of someone I know here who doesn't realize they're shorting the fiat currency, but has fundamentally figured out how the game works. So you can have a situation almost with two different people. One person diligently saves 10% of their income and invests, hoping to one day put down like a 50% deposit. The next guy realizes that the name of the game is to use other people's money to be able to buy income producing assets. And so that guy is always going to win in this fiat-based, desk-based system. Because effectively what he's done is he can put down a 10% deposit, and provided he's able to service his loan, and that's always going to be the key, the serviceability. As long as his cash flow is good, he can literally just use the bank's money to invest in an asset. In part, obviously, he's going to have to put down something. I don't think banks are going to be giving too many people 100% finance these days, but fundamentally, though, he can use the bank's money to invest in an asset and over a long period of time can pay off that, see some capital growth, refinance it, put down a deposit in another, and so it goes. Lather, rinse, repeat, as it were. And so the fella that I actually was talking about earlier, he's just a sparky. He's got 3 properties. And I look at it and I go, the risk-averse person who tried to just wait until they got in at the right time, waiting for a correction, hoping that the market would come down at some point, thinking that perhaps it wasn't a manipulated fake Ponzi scheme that is the Australian real estate market. That bush, Mac, is sitting there on the sidelines. It got more expensive by more or less 44% from peak to trough to buy an asset, a residential property at least here in Australia. And meanwhile, the guy who's just been using debt like a champion, smartly and able to service that debt, that guy, he's starving. And he doesn't realize that he's shorting the fiat currency, but that's what you're doing. It makes no sense to save and store your value in fiat to hopefully buy an asset that will grow in purchasing power. Rather just use the bank's money to buy these things. And as long as you can service them, you'll be styling in the end. So, the key with real estate, of course, is that you've got to invest in the right place, in the right areas, at the right time, at the right price. So a lot of people always talk about where, the how much they sold something for. Oh, you sold it for 10 million. Like, what did you buy it for? That's always the key. And so, if you want to do well in real estate, you've got to have a bit of an edge. I used to say that if you literally are an investor, you're probably going to have to pass on at least 9 opportunities before you actually jump on 1/10th, because you need a margin of safety to accommodate if things don't go quite your way, particularly if you're investing. And so that is a way that you can succeed. The low volatility of real estate is one of the attractive features, and you've got to highlight that. Like, for some people, it's nice to talk about a so-called steady 5-6% growth compounded over 10-20 years. It's a nice story to tell it, that we tell ourselves. But I think the important thing to remember is that it's not like stocks or bonds or Bitcoin. There's no mark-to-market pricing here. If you had to mark-to-market your real estate value every single day, it would go, wow, that's pretty volatile. But the fact is that it's only being done very, very occasionally, means that there is a perception of low volatility. I guess lower volatility then is actually the reality. And I think when we're talking about volatility, remember, it's both the upside and downside. So while real estate here in Australia has just pretty much gone up in a straight line, and I've come to this conclusion that it's just a Ponzi that the government will never allow to fail, and that they will keep importing people to keep the prices of homes artificially high, even if the sort of the price relative to the median income is just off the charts and some of the most expensive in the world. It doesn't matter. We have to keep the party going. Show me the incentives, I'll show you the outcome. Politicians aren't incentivized to ensure housing affordability after 4 years. They can do some sort of cheap stunts like, oh, well, here's 10,000 people get a first-time home buyers bonus, or some sort of favorable tax treatment to keep it going, or whatever the case may be. It's totally manipulated Ponzi market. It's not real. And I feel quite bad for the people who've been trying to get into this space and do so quite cautiously, because the sensible thing would be just to speculate like a degenerate and take out as much debt as you can at sort of 0 to 2% or whatever it might have been a couple of years back. And provided you can continue servicing your debt, you're really asset rich. So that's that. But having said that, when I spoke about the volatility, just remember one thing: commercial real estate has had a total bloodbath there in the States, like 80% valuation collapse in some parts of the country, San Francisco, Minneapolis, that sort of thing. I suspect it won't be as dramatic here. There are some fundamental changes structurally that will at least ensure that we've still got more demand for things like office space relative to the States, but I still think there's a lot more pain to come. So, you talk about volatility, it's like, real estate values here in the commercial real estate industry are off like at least 20% from their peaks, and I think they're still got another 10% to fall at least. But anyway, be that as may. So overall, if we were just to summarize the advantages, it can provide, it's a reliable source of income. It's got relatively low volatility. It can provide you with steady capital growth if you invest in the right area. And most of all, you can actually leverage. You can borrow against it to ultimately create wealth. You can use real estate as a mechanism to grow wealth by shorting the fiat currency. So that's really, as far as I can tell, the primary, benefits of real estate. Okay, so now over to, the bear case for real estate. The factors that I think make real estate relatively unattractive compared to stocks and certainly Bitcoin, almost certainly Bitcoin. Okay, the first thing is, unlike Bitcoin and stocks and bonds, it's actually illiquid. So if you want to get rid of it quickly, you're going to have to sell at fire sale prices. And so its illiquidity is one of the key issues. Even if you're lucky, you might be able to, enjoy liquidity within 35 days or 40 days. I mean, that would be something that's exceptionally quick, but that does limit your flexibility. and optionality. The second is like, if you're going to generate cash flow, you're going to have to put tenants in there, whether it's commercial or residential, and tenants cause problems. We've all been tenants. We've had things that go wrong. It's mold. It's the things falling off the ceiling. The aircon's not working. All these different types of things, like rightly or wrongly, you contact your landlord. You're going to have to deal with that. There's a lot of administrative headaches, okay? You're going to have to get involved with repairs and maintenance. And are you a tradie? Do you really understand your property? Can you do this all yourself? If you can, that can help at least preserve some of those margins that you can enjoy. But if you have to outsource everything from the repairs and maintenance to the management in terms of collecting the rent and invoicing them and dealing with inquiries and issues like that, and managing arrears. Oh, hey, you haven't paid me on time. You're like 6 days late, and my mortgage repayments went off 2 days ago. That's a real problem. You can outsource that, but it is a fee, and that just clips the ticket. That's sort of like a 5 or 6% fee that based on your collectibles that you're not going to see again. So from that perspective, if you want to, especially if you've got scale, you want to just outsource that to someone, because it's a total pain in the ass dealing with tenants and arrears and maintenance and stuff. And so if you've got a commercial or residential property, one of the things you have a risk of is vacancy. Like there's no income, and yet you'll still be having to pay the mortgage. Of course, in the context of residential these days, it's not as big an issue, but there still is that. One thing you need to make sure, particularly in the context of resi, is that you don't overcapitalize. So you can't really just create a home like your dream home. You certainly don't want to do that, because you will then suddenly find yourself priced to perfection. In other words, you have to have the market continue to move upwards exactly as you hope it does, for you to be able to at least just recoup your investment. And we spoke about like, yeah, your primary residence is not an investment, but I certainly don't want to lose money on it in real terms. And so I'll give you a practical example. The way our house is designed is such that I would actually probably rather have the whole kitchen put at the back of the property, and then take advantage of the whole rear of the property, which is at this stage underutilized. The problem to do so would be like a $300,000-$400,000 job, and then it suddenly makes our home, all things equal, just completely overcapitalized. Like they'll walk in and they'll go like, "Ooh, nice house," and you go, "Yes, but it is the most expensive in the street by far, and it's probably overcapitalized." So we've got to work with what we've got. So that's just something that you've got to take into consideration when it comes to property. Taxes, oh dear, you can't get enough of these, right? So if you're in Melbourne or Victorian or wherever, you might have to pay an Airbnb tax. You might have to pay a land tax if it's an investment property. If you live in the house, you still need to pay rates and taxes and all those kinds of things. And depending on what state you live in, there's like an emergency services levy and a fire service levy. And they always just keep splitting it out, and eventually be like, the grass collection levy and, the bird management and the pest management. And then it'll be like, they can always make up stuff. You can always just keep adding to it. So that's just something to bear in mind. Things like stocks and, Bitcoin, certainly you don't have that issue where you've got to actually just sit there and pay tax on it. You don't have any tenants, obviously, when it comes to those assets. So it's just something to think about. The interest rate risk is a very real one. A lot of people here in Australia were on fixed interest rates for 3 years, and then it switched over to variable. Unlike the States, where you can just lock in a low rate for like 30 years, which is like a dream. I mean, honestly, what a Ponzi here. I can't believe that. Like literally 30 years at like 3%. I mean, what a terrible return for a bank. I suppose if you're just printing money out of thin air, it's okay. But here in Australia, you can lock in for say 3 years or maybe even 5 years in some instances. You might get an interest-only loan, but ultimately these things have to reset back to reality to be variable, to the variable rate of the time. And I guess that's fundamentally a big risk. And you've got to factor it in when you're buying the property to go like, okay, I can afford this today, sure. What happens if interest rates double? How about if they triple? We've had interest rates here in Australia approaching 20%. Now, do I think that it is politically feasible for that ever to happen again? I don't think so. I feel like I know enough about the culture here to know that it'd be mayhem. Capital values would plunge. People would lose their homes. There'd be fire sales left, right, and center. 80% of people's wealth is tied up in their primary residence, and real estate is a protected asset class. It's like it's a one-trick pony in the sense the government just realizes like this is one thing we can't screw up. Maybe we can allow the ASX to tank, but we just can't allow residential property to tank in particular. So, but having said that, though, there still is the very real risk that maybe one day they increase rates by 2, 3, 4%, and then suddenly you're underwater. So you've got to be able to service that. If you live in some countries like South Africa, you've got to think about stuff like expropriation. I mean, even in Australia, there's that famous movie, The Castle. Government can always come and take your property if for whatever reason your property meets the threshold in terms of the prevailing legislation. In South Africa, you have things like land claims. So people who are dispossessed of their properties during apartheid have the ability to make claims on properties. Now, if I've looked at some properties for sale in South Africa, like game farms, and they'll go like land claim free, and I was just wondering, like, that's kind of weird, hey, in a way, like you kind of you would hope that the title itself would be sufficiently strong to ward off any other claims that, hey, we own this. In other words, the title deed of the property should be stronger than any other rights, but it's not always the case. And so that's something to think about. Obviously, with property, doesn't matter what kind, you need insurance because you need to be able to protect your house in case things happen. If there's a fire or flood or a storm, my stocks and my Bitcoin's okay, but my house could be totally wrecked. I mean, we had floods in Brisbane where homes were like literally underwater, and if they didn't have insurance, feel bad for you. So that's kind of something to think about. Just higher operating costs, it just goes to the operating cost piece. It's one of the unfortunate things about real estate. It's just you need to be hands-on, and if you're not going to be hands-on, you need to outsource that, and that just increases all your operating costs. And there just are other innate operating costs that you can't get around: insurance, tax. The other thing about real estate that's quite challenging, I think, from my perspective, is the fact that and I say this, and I mean this with respect, like it's not your property, okay? You're just a meat puppet living on government land with their permission. You can't do what the hell you want with your property. I want to build a granny flats, but the rules are such that in my particular district, I have to make sure that I can only cover 50% of my land. Otherwise, I need to go through a special approval process. Ironically, if I was 100 meters across the bridge, I would have another completely different set of laws that apply to me. And so I guess it can get kind of arbitrary, and it just introduces a whole layer of bureaucracy and red tape. Now you need to employ professionals to do design work, to get engineers, to get, certifiers. I mean, the list of middlemen involved in just trying to do an extension to your house is just mind-blowing. And so it's not your property. You don't own everything below and above it. You can only do certain things with it. I mean, and you might well say, hey, I want some regulation. I don't want a skyscraper next to my beautiful winery in South Australia. Yeah, sure, I agree. That'll be gross. That's pretty obvious. But then there's other stuff where just like it kind of on a slippery slope, it just gets worse and worse and worse. And so you don't own your property. You are just living there with their permission, and that's just something you have to deal with. There's the market risk in the sense that I don't think this applies as much in Australia. I've kind of given up thinking that Australia is an open and fair free market. It's just terribly opaque in the sense that if you've ever tried to go and figure out like what was it marketed at, how long did it sit at that price, what was it dropped to, how long was it marketed at that price, what did it sell for? Like that's a truly transparent market. Part of the Australian property Ponzi is the fact that you don't get access to that information unless you pay. It's pay to play. And so from my perspective, like I'd love to know, like I can go and have a look at what Bitcoin's price was, 6 months ago, a stock, what their performance was like. I'll go and read the annual reports. I don't do that, but I can. You know what I'm saying? I actually fundamentally can go and establish that sort of thing. There is an idea of there's, audited financials. I can go and actually have a look at what the net present value is of the shares relative to kind of how it's trading and all that kind of stuff. You can do these kind of things. You can do discounted cash flows. With property, it's very hard to figure out like what's actually happening in the market because A, the properties are all unique, and B, they're very opaque with the pricing. And and so when you're trying to figure out like what price to get in, it's not always very obvious, and you always feel like there's a bit of risk there. Now, if you overpay, yeah, it can actually turn out to be pretty bad. I mean, in certain parts of the world, you can just walk away and give them back the property. In most parts of the world, like where we live here, it's like, yeah, sorry, bro, you got $1 million mortgage, and you still owe us, and I don't care that the market's gone against you. Now, I'm not sure the market is going to go against us here in Australia, just by virtue of the fact that it's a total Ponzi and they know it and they have to keep pumping it up. Um, but there is a chance with real estate that things can go backwards. I mean, commercial real estate, you might go, oh man, commercial real estate returns are better. You bought a little strip mall, and now suddenly, now the tenants are all like struggling at the moment because there's another competitor that opened up across the road, and suddenly now your property's gone backwards in value because it's valued based on the cash flow, and you don't have any cash flow, and then suddenly your loan to value ratio blows out, and then the bank wants to start accelerating payments, and you're like, oh shit, what have I done here? So it's not a slam dunk, it's not a home run. The market can go against you. Um, for people that care about self-sovereignty, part of the problem with property is the fact you can't just take you anywhere with you. It's big, cumbersome, physical, attached to the earth here. So you've got that jurisdictional risk. Something like stocks, you could just sell, take your cash and fly off if you wanted to. It wouldn't be easy if you did fiat rails, but with Bitcoin, of course, it's a totally different kettle of fish. It's international. You just take your Bitcoin, your capital wings, and off you go. And then finally, I think the one thing I did want to highlight here was, transaction costs. Oh boy. It's one of my worst things about property. There's all these middlemen that get involved in the whole process, whether it's the conveyancer, through to the agents, through to the government, literally just charging you transfer duty just by virtue of being able to say, I own this. Just to have your name on a piece of paper. It's like, here's 30 or 50 grand or whatever. It's like, thanks very much. What a privilege. And then when you sell, you're going to be spending like 20, 40 grand to an agent. And look, I've been an agent, so I get it. It's like, it can be a pain in the ass. It can be a lot of work. But there's it doesn't matter what the reality is. It just means that you as the owner have to cop it. And so you got to take it into account when you sort of weighing it up. And so I always love talking to these people who are like, oh, I bought my house at 1 million and then I sold it at like 1.5. Don't know why I have to do the accent, but and I'm like, yeah, bro, okay, but let's work out the real returns after everything. Like I've owned this property that we're in since June, and even though I think the property's gone up in value, nominal terms, it's just cost us so much because we're just fixing things left, right, and center. Um, and these are all just eat into your margins. But I don't think people think like that. They just take the top and the bottom number and go, oi, I made $500,000. And you're like, listen, brother, take into account all the transactional costs. And let's talk. But most people don't think like that. So I guess those are all the things that I look at when it comes to, I guess, the shortcomings, rather, shall I say, of real estate relative to other asset classes. And perhaps now, why is Bitcoin better? Okay, well, obviously Bitcoin's liquid, trades 24/7, in 130 plus countries. I don't actually know this number. I should actually figure that out, but um, you can basically achieve liquidity almost instantaneously anywhere in the world. You don't have any tenants, you don't have maintenance, you don't have taxes unless you sell. You don't have to be worried about interest rate risks or margin calls unless you're playing with leverage. Nobody can expropriate you. It's like, you literally have cryptographic proof that you own your Bitcoin, and nobody can break that cryptography. It's literally your private keys. Like nobody can guess your private keys. As I heard from peers on a recent podcast of mine, it's like literally trying to find a treasure on a 70-kilometer stretch of beach, and that treasure is located on a single granule of sand. And that's even probably understating it dramatically. So you're not going to be able to expropriate this. I don't need insurance for it. It doesn't cost me anything to store it. I can pay someone if I want to as sort of insurance against myself, but it's not necessarily inherently required. there's no real regulations in terms of what I can and can't do. Like with my Bitcoin, I mean, I can go and give it to BlockFi and get 5 or 6%, and they can rehypothecate it and muck around. I can post it with Unchained, and then I can borrow some fiat from that. And there's no one who can stop me and tell me what to do. It doesn't matter if it rains or pours or there's storms or there's fires or there's floods. If your setup is sufficiently robust, you will not lose access to your Bitcoin. Obviously, if you've got a single sig wallet and it was on a paper wallet, and there's a fire in your house, yeah, you've just made a donation to the market. Of course, relative to like a market risk, yes, Bitcoin, much like real estate, there is a market risk in the sense that it can go backwards. But if you've held for any period of 4 years, doesn't matter which 4-year period it is, you've at least doubled your money. And so the name of the game is just to hold. Yes, it's more volatile. We know that relative to real estate. Even if we take into account that real estate is probably a lot more volatile than we think, given the fact that it's not sort of regularly priced in the market 24/7. However, even if we put that aside, volatility is the price you pay for explosive returns. And so upside, downside volatility is the price we pay in order for us to comfortably double our money every 4 years. And finally, if something like self-sovereignty is important to you, if something like true ownership is important to you, in the sense that you want to be able to take your capital with you wherever you want, you do not want to be locked up, you do not want to be constrained, you want liquidity, and you want to be able to take it wherever you go, Bitcoin's the answer. So from my perspective, on a risk-adjusted basis, there's just too many downsides for residential real estate, for commercial real estate, any form of real estate relative to Bitcoin. The main difference, of course, comes down to the volatility and not being able to ride that, and the fact that residential or commercial real estate can create a cash flow for you. However, my belief set is such that if you take residential or commercial properties, capital growth plus the income returns, they are dwarfed relative to the upside of Bitcoin's capital growth. You can go and get a yield on your Bitcoin. Yes, you're going to be risking it, but there is that possibility. Don't recommend it. Terrible idea. But fundamentally, Bitcoin has no cash flow. The yield in Bitcoin is the people you meet along the way, and the learnings that you take from engaging with such an incredible community of independent-minded and really unique critical thinkers. And I guess that's all I have to say about that. All right, so on that note, thank you very much. If you've stuck through to the end, well done. I will be having a look at the analytics and seeing whether or not this is indeed something that the people want, or if it confirms my suspicion that I am merely a vessel for questions and they are more interested in hearing about the guests. Nonetheless, quick shout out to everyone who came and said hey to me at Bitcoin Alive. Thank you so much. Really enjoy meeting people. Can't tell you what a rush it is. You meet people who listen to a show and you're like, there you are. Like, all I see are these aggregate numbers, and I'm like, who are these people? And it's just so epic to meet people in real life who are supporting my work and give me so much encouragement. So, sometimes I feel like I'm just talking to a screen all on my own, like I am right now. And it can be a bit of a grind at times, man. It can be a lonely pursuit, but the fact that there's people along the way supporting me means the world to me, and I appreciate your peace, friends. Thanks for listening to today's episode. I hope you enjoyed the conversation and that you got some value out of it. Either way, hit me up on Twitter and let me know what you think. My handle is Dale21M. If you've got any suggestions as to people you think I should be talking to or topics I should address too, I would love that sort of feedback. Otherwise, if you want to support the show, there's a couple different ways you can do that. The first is just to share it amongst your friends and family. The more that people hear the message that Bitcoin and crypto are not the same thing, the better. And I want to help people understand that. The second thing you can do is give me a 5-star review on whichever podcast app you're using. Of course, that's only if I deserve it. And last but not least, if you want to stream sats my way via the Fountain app, I'm not going to say no, but it's not expected.
Thank you so much for your support thus far. It means the world to me. I appreciate the hell out of you, and the best is yet to come. Much love, friends. I'll see you on the other side.